Jaiprakash Associates lenders have a little bit more time before they have to initiate insolvency proceedings against the company. The RBI has asked ICICI, which is the largest lender, to first seek clarification from the Supreme Court. Let's go across to Vishwanath Nair, who's brought us the details on this story. Vishwanath, what's going on? There seems to be some sort of back and forth on this particular account.
Yeah, so what we understand through our sources is that Jaiprakash Associates was part of the 29 stressed accounts that the Reserve Bank of India had put in the second list, where the bankers had time till the 13th of December to resolve it outside the NCLT process, failing which they would have to take it to NCLT, simple and clean. But what happened eventually is that the Reserve Bank of India reached out or has had a communication with ICICI Bank, the lead lender in this case, and told them that you hold off temporarily on any insolvency proceedings till you get some clarity from the Supreme Court whether the bankers can go ahead and invoke any insolvency. The issue is, in the JP Infratech case, which is part of the first 12 insolvency cases, the Supreme Court got involved in the matter and has stayed the insolvency proceedings. Apart from that, they've also put in some kind of restrictions on the directors and the promoters of Jaiprakash Associates, which is the promoting company of JP Infratech. They've said that you cannot sell or trade in any of your assets. So till there is some clarity from the Supreme Court, the bankers cannot go ahead and invoke insolvency in JP Associates. That is what we understand from our sources.
Vishwanath, just a quick follow-up. So the reason this clarification has come now is because the deadline for the 28 accounts which are on the second list has sort of passed, and we are expecting, as you had reported a few weeks back, most of these accounts to go into insolvency?
That's right. So we had said that about 24, 25 odd accounts are likely to go into insolvency of the 28, 29. So JP Associates was one of the cases where there was some kind of resolution which was being planned outside the NCLT process. Bankers were more or less certain, but it seems, and that is what our sources are telling us, that the Reserve Bank of India has sort of rejected that option, saying that the plan that you have submitted as a restructuring plan is probably not sustainable, and therefore resolving it outside the NCLT is out of question. What happens within the NCLT, that is something that the lenders will have to watch out for, depending on the Supreme Court's clarity.
Hold the thought, Vishwanath. Let's also get another side of the story. The Reserve Bank of India has put yet another lender under prompt corrective action of the PCA. Allahabad Bank is the latest in the caught in the RBI scanner. This after an on-site inspection revealed high NPAs, the non-performing assets, and negative return on assets for 2 consecutive years. But which are the other banks on that list? How do their books compare with each other? Vishwanath has put that list for us. Take us through that list, Vishwanath.
Yeah, so we have about 11 banks now, which is roughly about half of all the listed public sector banks that are there in the system. These guys are all under the prompt corrective action initiated by the Reserve Bank of India over the course of last year. Some of these go back beyond, like for example, banks like Indian Overseas Bank and UCO Bank were banks where the PCA was invoked a while back. So what this seems to suggest is that typically whenever you cross the gross NPA ratio of about 11%, that is when the Reserve Bank of India starts getting a little cautious and starts to invoke this PCA. PCA, essentially how the Reserve Bank of India defines it, is a mechanism through which you can turn around these banks and bring them back to health. That is all that the aim of the PCA is, and they have been clarifying that this does not mean that the depositors are under any kind of stress just because these banks have been under this process. Apart from the NPA number, an important number also to look at is the capital adequacy, wherein if you look at where these banks stand, apart from say a Bank of India, which is about 12.23%, most others are at sort of a danger zone. Under Basel III, the banks are supposed to maintain a certain amount of tier 1 equity so that they can remain healthy and solvent. So since a lot of these banks are at the edge, or in fact some of them are below, these raise the concerns for the Reserve Bank of India to invoke the PCA in these banks.
All right, Vishwanath, thanks so much for detailing. I think the standout part of this is that half of the government listed banks are under the RBI's watch.